Understanding the stock market, a model of aggregate stock prices. To determine the PE ratio of the S&P index, you calculate it by dividing the total market value of all companies within the S&P 500 by the sum of their individual earnings per share, or EPS, essentially finding the average price-to-earnings ratio across all the index components. The formula is sum of all S&P 500 market caps divided by sum of all S&P 500 company earnings per share. Key points about calculating the S&P 500. Market cap weighted. The S&P 500 is a market cap weighted index, meaning larger companies with higher market capitalization have a greater influence on the overall PE calculation. Trailing versus forward. You can use either trailing PE based on past earnings or forward PE based on estimated future earnings to calculate the S&P 500 trailing versus forward price earnings. You can use either trailing PE based on past earnings or forward PE based on estimated future earnings to calculate the S&P 500 price earnings depending on your investment focus. Data sources. Financial data providers like Bloomberg can provide the necessary information to calculate the S&P 500 price earnings.